All right, folks, we're fortunate to have with us today Nicholas Damm, CEO of Intercontinental Development. And welcome to the show. Welcome, Nick. Great to have you on
Thank you.
here. All
Thank you for
righty.
having me.
Yeah. So you're leading Intercontinental Development, focusing on office, industrial, and flex properties. So that's an interesting mix in today's market. Um, you've also come up through the finance and accounting side of real estate. So that gives you a very different perspective than most developers here.
Yeah,
Yeah.
yeah, that's true. So thanks for having me on. I'm happy to be on and discuss some real estate. So
Hmm.
yeah, the company, we do a few different types of real estate. Um,
Hmm.
we're still doing office today and doing pretty well with it despite some industry-wide headwinds. Industrial sectors, some of the light
Hmm.
industrial and flex properties we have as well are certainly seeing good demand for those. And yeah, balancing that all in today's market and yeah, leaning on been in real estate lifelong, but went have some education in finance and accounting, and so blending that all together.
Right. Oh, excellent. So I got to ask you, what originally pulled you into commercial real estate and specifically development? Was there a light bulb moment, or was it just naturally progressing to this
Yeah,
niche? What
oh,
was it
that's
like for you?
It's a good question. So I'll rewind it all the way back. I never had a typical quote kid job, right? I didn't deliver papers or work at McDonald's or anything like that. Had a neighbor who was in the residential development and custom home building business, and started working there as a kid. Did that through high school, through college, and then after college. So
Mhm.
kind of cut my teeth all in the real estate world. And then we were doing some small commercial stuff at the time. And then 2008, 2009 came along, really was really tough on the residential side of the business. And then got together with someone else at the time and then decided to focus completely on commercial. Had a nice opportunity in that what became my senior partner was involved in another business before this. So he did not have what a lot of people in the real estate world were dealing with at that time, were a lot of
Mm.
previous deals that were sort of weighing somebody down, a lot of sins to make up for, that kind of thing. So it was a fresh start. And yeah, the commercial side of the business honestly naturally resonated with me pretty quickly. I had a little tougher time sometimes on the residential side, so maybe a little bit more of an emotional decision as opposed to
Yeah.
commercial, which is a little bit more of a financial and logistics
Mm.
kind of a decision. So
Yeah.
felt pretty
Yeah.
natural to
So
me from the beginning. So
nice.
yeah.
Starting as a controller and finance and accounting manager, before stepping into CEO role, how does a finance first background influence the way you evaluate deals today?
Yeah, great question. So I think first and foremost, I would consider myself a numbers person at heart. So obviously the real estate has to work, but I think I can get pretty far on a spreadsheet before I ever look at a property. So that's
Hmm.
maybe a little different. Maybe I think some people who are maybe more focused on the bricks and sticks might look at that first and then the number second. Obviously, everyone's going to have to blend them together at some point. But I would probably consider myself a numbers first kind of a person, and then does the real estate match what's being modeled out on a spreadsheet?
Righto, righto. So do you think developers sometimes underestimate the financial side of the project? Um, is
Yeah, it's
that
certainly
pretty
true. I mean,
standard?
yeah. I think anybody who's been in any part of this business could probably tell you under budget and ahead of time it does happen, but the flip side of that of being over budget and longer than expected certainly happens probably more often.
Hmm.
It can certainly be a difficult thing, and look, it can be hard because at a certain point, you're going to have to absorb some risk as any portion of this business. So can you model in enough the right assumptions, give yourself enough wiggle room in terms of your timing and your budgets to be able to make a project work and hopefully not get too stuck in the analysis because at a certain point, the project has to either be a go or no go. And it's certainly easy to talk yourself out of them at sometimes. Sometimes projects get a
Yep.
little ego driven too, and you can talk yourself into something that might not make the best decision. But um, ultimately, I think the idea of just doing enough work that you feel like we can make some good assumptions and feel solid on them and know that what you've put together is realistic and then knowing that that's just going to be a guide and you're going to make some adjustments along the way is probably
Mhm.
the best way to approach it because there's just
Yeah.
never going to be a project where everything goes 100% to plan.
Is it fair to say real estate is won or lost on the numbers before the ground is ever broken?
Think so? Yeah, I think that's well said. I think that the I think there are projects I see, and some people have joked about them too. You see these things like pride of ownership, generational opportunities, things like that. I think those are the kind of projects where sometimes people can get overexcited about a project for maybe the wrong reasons that aren't financial, right? Again, I mentioned ego, and I think some people occasionally fall trapped with that. But the reality is, yeah, if the numbers don't work, the project can be the most exciting, very cool thing, but it's just not going to be viable if you can't get the numbers to work.
So yeah, you transitioned into leading the company as CEO. What were the biggest mindset shifts moving from operations and finance into full leadership role here?
Yeah, well, we are a small private company, so everybody's job here at the company does have a pretty wide range, right? So I never felt too specific in pigeonholed into a specific role. I always describe that everybody's job structure is pretty wide. So yeah, there were some changes along the way. Certainly having to be better at delegating and managing people were
Mm,
some new things. Managing different teams, those were some new
yeah.
changes, and certainly something that I try to work on, continue to work on, and knowing that I do have a great team here to lean
Mm,
on, and trying to lean on them because it's impossible to be a one-man band, especially as time goes on and things get busier. So I try to do that, and I'm fortunate to have a lot of great people to be able to help and work with here at the company.
nice. Well, what in a general sense here, what does leadership look like in most development companies today, based on your experience and what you've seen out there? And then how does that contrast with your company?
Yeah, I think our company is really probably pretty similar to most. Yeah, I think it's really kind of you're blending your office teams and then your field teams together. Um, we try to be really hands-on and try to have a lot of communication across the organization. We made a decision pretty early on in COVID that to the extent we could, and then shortly as things lifted up after that, to be able to be in the office as a small
Yeah.
team, we really feel like that's an essential part for us. So we try to be flexible with people's schedules, but our general idea is that all of us are in the office 5 days a week.
Mm-hmm.
Certainly something that we feel like has helped because there are a lot of organic conversations that just happen and hearing things that are going on and helping to link some things together um,
Yeah.
are what I find beneficial to it. I have less scheduled meetings. I don't need an accounting team check-in, a property management team check-in, and this and that to be able to do all of these. A lot of these conversations just happen quickly in an unscheduled way.
Yeah.
So for us, yeah, being all together helps. We have the benefit of most of the real estate that we own is all relatively local, so we kind of all sync up in the office most days. And then a lot of the field team is going out to the various properties. But so for
Yeah.
us, yeah, and for me specifically, it's trying to blend across the people that are in
Yeah.
the
Yeah.
office and in the field and try to marry that all together.
Yes, yes. So one of your core focuses currently is your build to suit projects here. And for listeners who may not be familiar with this, well, perhaps you could explain then what exactly is build to suit and why is it attractive to clients?
Sure. Yeah, so it's basically conceiving a project from pre-construction, right before the ground ever gets broken, and you know you're building it for a specific tenant. Probably one of the most unique ones we ever did a little while ago was we were building about a 30,000 square foot flex building here in Pennsylvania. But before we even got that out of the ground, we knew that we had a commitment from one tenant who was going to open an indoor gun store and shooting range. So the build out of a shooting range is obviously very specific and unique. And putting aside any feelings that people might have on the end use of guns, right? I know it can be a little bit of a polarizing topic, but the it's a project that really was only doable in a build to suit way. We knew that what we had to make as far as the building match with what they needed as far as what they were going to use as their end use. So a really unique custom use.
Yep.
That's an example of a build to suit, and that's where I think where it works well. Anything where the end use is specialized and unique. There's
Okay.
pharma. We have a building here also, all that is sort of an FDA, not sort of, it's an FDA regulated facility that
Yeah.
needs to have a very specific use. So things like that are good fits for build a suit whenever you have a very unique specific use.
Hmm. And so you've got to have that long-term tenant alignment. Um, yeah, if they ever remodel in the future, probably they're going to go back to you, having done the specific customized construction
Yeah,
originally, you know?
Yeah, that's right. Yeah, so going back to that, again, the gun range was we by the time we were under construction on it, they got a pretty large capital infusion from a new partner, and then they were already ready to start phase two of the project before we were even really very far along in phase one. So yeah, coming back and just trying to be a good resource for them, knowing that most businesses don't necessarily have teams to be able to handle something like this in-house. We try to fill that role for them, and that's something we try to do across the board, right? To alleviate a company's stress, headaches, and challenges with finding the real estate that works for whatever their business is. So we try to be a good long-term partner with them. Certainly, companies evolve, grow, sometimes shrink. Obviously, we hope they grow more than shrink, but trying to continue to evolve with them as their needs change is something that we focus a lot on. It's one of the things that I
Okay.
think gives us a little bit of something unique in the sense of we are, not necessarily trying to be the largest company out there, but it gives us a nice close relationship with these tenants. And the hope is
Mhm.
that we build really long-term relationships with them and we evolve and grow as they need.
What about the risk mitigation components of a customized build here? Is there more risk for you? And if there is, how do you deal with that with build to suit developments?
Yeah, there is a little bit more risk in the sense of if that tenant does not work and isn't able to maybe meet their financial obligations, if it's a long-term lease, uh, we want to know what the possibility is to maybe reutilize that for somebody in the future.
Hmm.
But before you even really get to that, it's a lot of due diligence to make sure that the tenant is financially viable. Sometimes it's a startup, right? So you have to take some time to understand the business model, the assumptions that went into that. And actually, one of the things I like a lot about this business is I get a lot of interesting little glimpses into people's various businesses. And there are some really great businesses, and everybody focuses on really large businesses, a lot of Fortune 500 companies, things like that. But one of the things that I've found and continue to find very interesting in this business is just how many great, interesting business stories there are of companies that people may not even be aware of that are very successful companies.
Hmm. Hmm. Now you operate across office, industrial, and flex space. Flex space in particular, it's been gaining a lot of attention lately. And what makes flex space such an attractive asset class right now?
Yeah, I think it's right in the name in the sense of flex and being able to change it a little bit, adapt it, make it work. And the world certainly continues to evolve and change. And as we do that, the spaces that are a little more easily adaptable are generally more successful today. So I think that's
Hmm.
one of the things that's been good about those types of spaces.
All right. And how would you say the tenants' demands may be changing across these three sectors, office, industrial, and flex? Um, yeah, could you speak on that? How
Sure.
what are
Yeah.
tenants demanding these? Yeah.
Yeah. So office has probably undergone the biggest changes over the
Mhm.
last 6 or 7 years, right? If we rewind back to 2019, most companies were full-time in office, and companies have certainly evolved that. Um, we see most of what we have all of what we have in the office side of things is all suburban. So we feel that that's done a little better than urban areas. Again, we don't have any urban investments, but we certainly try to track what's going on across the industry. Um, the larger companies more so have compressed their footprints. We've seen
Mhm.
attrition in tenants in the office side of things is companies that have many locations, right? The more locations they have, the more likely they are to try to be closing some of those. Um,
Mhm.
but we've had a lot of success with small business tenants, tenants that have one location, and those tenants have largely kept their offices. What they're looking for, it's a little different. Certainly, amenities are a big thing today, right? Shared conference rooms, places to eat, fitness areas, things
Mhm.
like that. And then probably also smaller footprint spaces. So
Yeah.
we continue to
Right.
try to evolve that. And fortunately for us, we've always done a lot of small and medium-sized spaces. So it wasn't as big of a change for us, maybe, as some of the other tenants. And so I do
Mhm.
feel that we got a little bit fortunate in that the way that we were already trending seems to have matched up pretty well with the industry. And I think that's helped us maintain a good occupancy level across the portfolio.
Nice, nice. Yeah, and you're based in Eastern Pennsylvania here, but um, these trends are happening nationally. What are you seeing in your particular market right now in Eastern Pennsylvania?
Yeah. Certainly, a lot of those things are happening at the national level, as you said, but that's a lot of what we see sort of on the ground. Um, Been definitely seeing a pretty good trend of people wanting to recommit to office space in the last year or so,
Hmm.
but also finding some new and interesting ways to use office space that has replaced maybe some of the traditional office tenants that have maybe the demand has gone down for, right? So your kind of typical
What's that?
financial advisors and accountants and things like that, of maybe there's a little less demand for space from those, but we're doing some new stuff to adaptively reuse some of these spaces, mental health, behavioral health, occupational therapy, a lot of different things related to that, things that are almost
Health
not
fields.
quite full on medical, but light medical
Hmm.
have been good. And those tenants have really become almost an individual subcategory within the space. And we've done a lot of leasing to those recently because there are a lot of tenants out there looking for those types of spaces. So that's a lot of the way that we've reused some of the office space where we've seen some of the occupancy from more traditional professional tenants go down a bit.
Hmm. It seems like regulation is always there in your industry, and development keeps getting more complex in recent years. And what are some of the biggest challenges that you're facing today? Uh, could be construction costs, financing environment, regulatory hurdles. What's what are the
Yeah.
bottlenecks these days for your industry and then your company in particular? And how are you handling them?
Yeah. So the ongoing challenges are all three things that you mentioned. Financing does seem to have opened up a little bit more recently. Banks are still on the conservative side, but that's certainly helping a bit. Permitting remains an ongoing, very tough challenge,
Yep.
and remains one of the hardest things to account for when you're scheduling things. We often find that we have these schedules that exist, and they're relative because we don't know how long until we can actually start construction. Upon starting construction, we generally find that we can control things pretty well, especially if we're not coming from the ground up. It's pretty well able to be scheduled. And then beyond that, yeah, construction costs are absolutely an ongoing factor. And then operating costs, because for our model, we are long-term holders of real estate, right? So we are not
Okay.
just doing projects that are done quickly or done in a year or 2 or 3 years. We're generally looking at a 10 plus year time horizon. Sometimes we do take an opportunity to sell before that, but generally that's what we're going in with the expectation of. So operating costs for services, landscaping, HVAC, snow removal, continue to be a challenge. And,
Yeah.
they remain an ongoing focus for us. We just do our best to manage them, but there's no doubt that a lot of these costs have gone up. The material costs are higher, labor costs are significantly higher. I think that's a challenge across the industry, and everybody's just trying to do the best they can to try to keep those costs in line as close as you can to original budgets.
Yeah.
But evolving those has definitely been a challenge in the business.
Mhm. Okay. So development, in development, you're managing risk at every stage. Has the risk changed as you proceed in your development? Has the risk activity changed for you? Is it more towards the end, the beginning, the regulatory, or how's that evolved for you guys?
Yeah, it's a good question. Honestly, the way we've evolved it, I could just speak to how we've handled it is we have not been doing quite as much development. We've been doing more value add. I mentioned earlier, we're still pretty bullish on office,
Mm-hmm.
cautiously bullish maybe. So we find that there's been some pretty good opportunities out there to buy office that's been struggling a little bit. And some of those initial development challenges they're very real. There's just no getting around them. But
Mm-hmm.
being able to avoid some of those by doing a value add project sometimes is a nice way to augment the cycle. If you find a building that's maybe 50 or 60% leased and figure out what needs to be done to be able to get it back up to somewhere in the 90 to 100% leased range. So we've been doing a lot of that and have had good success there because there are a few less variables.
Yeah. Mm-hmm. You're delivering customized solutions for professional clients all over the place here. And what do clients care most about today when they're leasing or they're building space? What are they most concerned about?
They are really trying to match their space to their workflow.
Mm-hmm.
That probably starts first and foremost with headcount. So matching that and making sure they have a space that fits their business. And then for certain companies, they place a lot of emphasis on, is it a place that people really want to come to work? That's certainly a big thing today for office. Having people have an environment that feels attractive and helps to get companies over the hurdle as they try to get more in-office presence back.
Mm-hmm.
Having that space that welcomes employees and feels good to them certainly seems like a focus for office tenants. And then continuing to provide a good ongoing maintenance experience and property management experience. We have our own property management section of the company, and we do that really to be able to deliver a good experience to the tenants and all their employees underneath the company, because it's it can certainly be a spot where things fall through if the developer takes it to a certain point and then completely hands it off.
Mm-hmm.
And a lot of times when we take over some of these buildings, we've seen property management where they're doing an okay job, right? A C plus kind of a job, but they're just not doing those handful of extra things that can really make a difference. So we feel like that's a big differentiator for us, and something we try to focus on to try to keep that experience good. So build a space that fits them, and then give them a good experience throughout the term of that lease.
Nice, nice. Oh, I thought we could focus on financial strategy, perhaps in development here. And
Sure.
with your background, we could dig right into this. So, how do you structure your deals today to make them viable in a higher interest rate environment today?
Yeah, good question. So we generally structure ours with a mix of equity and debt. So we do utilize both. But we're leaning a little heavier on equity today than we did on debt maybe in the past. I think there was a long stretch where basically the easy adage was you borrow as much as you can. Really low interest rate environment, banks very eager to lend. It made a lot of sense to do borrowing as to the maximum amount you could do responsibly. But now in the today's environment where you're looking at interest rates that are going to be generally in the 6 to 7% range, the math changes a little bit, and
Mm,
so leaning a little bit more on equity is
yep.
is something that we're looking at a little more today. And that helps too. We touched earlier on banks' willingness to lend, and I think it's easing up a little bit, but they're still generally looking for a little more equity from owners, and they're not pushing those loan to values up as high as maybe they were a few years ago. So that's what we're
Yeah.
seeing today.
Mm. So when you're looking ahead, say 3 to 5 years, what changes do you see coming in commercial real estate when you get out your crystal ball here, looking down the road?
Yeah, so we are starting to see a lot of people have been waiting to see what is going to happen with a lot of office real estate.
Yeah.
I think that we're starting to see that those changes are starting to happen now. In urban areas, a lot of projects are going and trying to do the office to residential, office to apartment conversion.
Mm.
That's certainly been a trend in the industry. Um, in the suburban environments, some of the older buildings have maybe been scraped, demoed in favor of trying to do apartments.
Mm.
So there's definitely a lot of that. It's not a particular sector that we get into, but we do try to follow it as it kind of all ties together. Um, and then some of the buildings where owners have maybe taken a little bit of bumps and bruises, but haven't seen the occupancy decline to a low enough level that it would be worth demoing it, or it goes into foreclosure or something like that. We're starting to see some of those hit the market, right? So we've been waiting a little bit for some buying opportunities, as people start to feel a little bit of financial strain. So some of that's happening now. Feels like 2026. We've seen some of that come in these first few months of the year. So
Yeah.
I think owners who are well capitalized will have a nice advantage. Owners who have been prudent with not over leveraging have put themselves in a nice spot as we go forward. So
Mm.
you're never going to go wrong with being a little more conservative. Yeah, it might mean you can't do a couple extra deals, but at the end of the day, I think some of that patience and some of that
Mm.
conservative nature is going to be a little bit rewarded over these next few years.
Where do you see industrial demand? Light industrial, heavy industrial? Where do you see that in the next 3 to 5?
Yeah. So the light industrial continues to have a lot of demand. One of the reasons being it's really difficult to build new on that. So there's a limited supply. What is being built
Mhm.
new is generally very large distribution center type real estate. Certainly been a lot of construction in that industry, that segment of the industry over the last few years. Um, the smaller box stuff is mainly relying on the older supply, and can you find a way to utilize that? Those rates have gone up for tenants have gone up a lot. They've probably started to stabilize now, but
Mm.
demand seems to be very high. I think that'll continue to be very high, because I can't see much of a way for there to be new supply to come on the market there. So I think demand will remain high as supply remains limited.
Mhm. Okay. Okay. And hybrid or flex spaces, what's the difference between hybrid and flex? Uh, that's a
Yeah,
question I have. So,
yeah, no. So there's some so people talk about flex and it can mean a lot of different things. For there's some people who are looking at flex in terms of co-working spaces, right? A lot of people know WeWork, and that wasn't ultimately something that became as successful as maybe it was looking to be at a time, but
hmm,
um, maybe has some good merits, even though some of the things might have been a little flawed in that. Um, we're not going all the way to co-working, but we are taking some spaces and trying to figure out, can we make some of these smaller footprint office spaces work well for them? Um, there's also flex in just in the regards of like in a larger box sense of some buildings that have are generally a little bit of a mix between office and some light industrial, right? So you might see something like a building that might contain everything from a karate studio to a gym to an industrial cleaning facility. And
hmm.
so these buildings that are pretty adaptable in terms of what they can be used for.
Yeah.
It's something we've seen a lot of success with. We really like those, but we aren't unique in that. A lot of people are looking for those types of assets, and have
Hmm.
had good success with them.
Okay. And Nick, for someone looking to get into commercial real estate development today, what advice would you give them, having achieved your level of success and, having perhaps seen good times and hard times and gotten through them? What would you give someone for advice here on getting into commercial real estate development?
Well, I may be biased as a small company, but I think the ability to go work in a small environment is good. There's some great advantages to working in some big institutional type companies, but small business is going to give you a lot of exposure to a lot of different parts of it. You're going to do maybe some things that you wouldn't be able to do in a really structured, really large organization, and
Hmm.
get to be a little more hands-on. Again, I'm
Hmm.
admittedly biased. That's the way I learned to do it.
Hmm.
Just getting very hands-on in it. Been fortunate to have had some older business mentors who have taught me a lot, but a lot of that was really just my my being there, and they're allowing me to be there and absorb what's going on and understand it, and learn along the way.
There we go. All right. So Nick, yeah, your patience, your discipline, it's setting you apart from the startups and the people that are still struggling out there. So you've done well with this, and it's your ability to combine financial discipline with real world execution has been, seems like it's been a great success for you. So thank you for being on the podcast today, and I'm sure we could talk at length, for a while about the different details in each of these areas that you have expertise. So this is just a surface level. But for anybody who wants to get a hold of you and your company, where can they find you?
Yeah, so we you can find us. You can check out our website. You can search Intercontinental Development. We're located here in Pennsylvania. Active on LinkedIn. Have a new person in the office who's trying to get a little more active with posting some of the stuff we're doing on LinkedIn. So yeah, search us out. We'd love to
Yeah,
hear from you. And if you have a real estate need in the area or work in the business, certainly happy to make some connections.
nice, nice. All right. Well, thank you, Nick, for being on the podcast today. And
Thank
we'll
you.
look forward to, yeah.